Happy Friday. This is Jean Joe, broker and owner of Perisson Real Estate, and I'm back with another edition of Perisson Pulse. I'm a little bit under the weather with a sinus infection, so this one is going to be a little bit short today, but I did want to make sure not to miss a week. I'm trying to make sure that I do this regularly this year. So I'll be doing for today a quick market update and talking about what happened with our numbers in April. So the first metric I'm going to talk about is the median sale price. And for those of you who have heard me talk about this before, I'm sorry that it's kind of repetitive, but I think it bears repeating. So median sale price is the price at which the number of homes selling above that price is equal to the number of homes selling below it. This is for single family homes in San Mateo County going back 10 years. So that's to 2014. And in 2014, we hit in March what a little over $1 million. It was $1,010,000. So from there, we've seen it, up and down as it does with our seasonal trends and different economic indicators. But if you're looking at this chart here, you can almost draw a line just going straight through, right, to show that the prices have continued to gradually increase. Over here, right before in about 2018, that's when we saw the prices go actually hit 1.5 million and above. So in March of 2018, it was at 1.543 million, and then in April, 1.6 million. So we could see that peaking up, and then of course the ups and downs. This vertical line here is COVID lockdown in March 2020. And when that happened, everything paused a bit. And so people weren't quite sure what was going to happen. We do see a little bit of dip that always happens at the end of the year. And then once we started 2021, you can see that it just peaked up. Prices just peaked up and continued to do that through the first portion of 2022. We have this peak here. And in April of 2022 was our all-time high at 2.25 million. And then from there, as we got into the latter part, as we started going through the process of 2022, interest rates began to increase at such a high rate, basically doubled within the matter of 2 or 3 months. And that did stifle a little bit of the market. And so we do see that the prices started dropping down a bit to where this is January that you see here, January of 2023, we started out at a low of 1.485 million. So it actually dipped a little below 1.5 million. From there, 2023 was an interesting year, and we could see that the prices kind of hovered back and forth a little shy of somewhere between 1.7 and 1.9 million. And that just continued on steady on. We have a dip here, which happened in December. So usually our dips are in December, January. So in this case, 1.655 million. And then through the beginning part of this year, we've been seeing, and if you've been following along with my updates, so in January, it was 1,842,000. In February, it was 1.88. In March, it was 1.99. And for April, we actually hit a little over 2 million. So 2,005,500 as the median sale price. So again, it's almost as if you can draw a line going up all the way from 2014 to 2024, with the exception of this big kind of peak that happened in 2021 and the beginning part of 2022. This 2,050,000 is actually a high. It's the highest that we've had since June of 2022. So back in June of 2022, we were actually seeing, as I mentioned, April, it was 2.25 million, then kind of started coming down. June of that year was at 2,047,000, so a little bit less than this. So we're actually seeing a high in April that we haven't seen in about a year and a half, almost 2 years. The next metric that I like to talk about is months of inventory. So months of inventory is basically if you were to take the number of homes that are on the market and not add any new ones, how long would it take for us to run out of the stock at the current sale price, at the current sale rate that we're having? So that is months of inventory. Traditionally, 6 months of inventory is considered a balanced market. As you can see here, going back 10 years, the highest on the scale is actually 3 months. So we're seeing that pretty much over the last 10 years, we have been in what would be considered a seller's market. There have been some points at which you would almost feel like it's a little bit more of a buyer's market or trending in that direction. But it's in terms of that metric of, or that the tradition of thinking of 6 months as a balanced market, we've actually seen inventory levels very low. And this has actually continued out for the last 12 years for us in the Bay Area. I know that post-COVID, we did, so here's that vertical line you see, it kind of peaked up a little bit because houses were not selling at all. And so the rate was, for a period of about a month, we weren't able to even show homes or do open houses. So during that time, the rate is a little bit higher. And so we could see the inventory sitting a little bit longer. But soon after that, as I mentioned in 2021 and 2020, beginning part of 2022, you see that huge dip where it goes down to 1 month inventory levels. Talking more recently, though, you see the peak here, which is January of 2024, it was at 2.3 months, which is still quite low in terms of levels of inventory. And then for March and April, we see 1.3 months and 1.4 months of inventory. So if we did not have any new listings coming on the market, we would just run out of homes to sell in about a month, a little more than a month. So inventory levels super low. With that, we see the days to sell. So this has to do with when you put a house on the market and how long it takes to actually sell, to get into contract. This is not to close escrow, but to just get into contract. We see that the numbers in our area have been hovering pretty much around this middle point is a 15-day mark, if you can't see that very clearly. So it's been hovering around 15 days. We have had times when it does go up to close to 30 days. That's the highest in our, those are the peaks in this chart. You see a 0 for when we had the COVID lockdown because the MLS at that point, the multiple listing service decided to turn off the day counter because it was not really accurate to be saying that a house is on the market if nobody can go see it. And so that was the rationale there. And then we have been seeing, again, the beginning of 2023, as I mentioned, that's where we had the low of our sales, of our median sale price. We saw it peak up to almost 30 days, so it was at 29 days. And then since then, it's been hovering around. And right now, for April and March, we're hovering around the 8 or 9 day mark. So that's pretty amazing if you think about that. Again, this is median days to sell. If you just think about the fact that a house goes on the market and then the median number of days that it takes to sell that house and get it into contract is, less than 10 days. That means maybe one open house. And there are homes that do take longer to sell. And then there are homes that take even less than that to sell. Some that have been able to go into contract before pretty much as soon as they go on market. And so we're seeing that impact so why is it that our median sale price is staying up high is because the inventory is very low. Because the inventory is low, of course, when a home is attractive and it's, goes on the market, it's going to sell very quickly. And here's another picture of that whole aspect of inventory. For here, I'm not going to go into the numbers of it, but again, this goes back 10 years, and you can see this talks about the new inventory. So each month, how many new listings came on the market. And you can see the ups and downs and ups and downs. Those have to do with the December, January is always where we're going to get the lower numbers because homeowners are thinking, well, we're going to, we want the holidays. We want to celebrate the holidays in peace. We do, maybe we'll wait until the new year when things are fresh and we have more buyers around. And so if they can choose to wait, then they do. It never goes down to 0 because there are always cases. And I've had times when I put a listing on the market between Christmas and New Year. So there's always a different need that people have to put homes on the market. But if they can afford to wait, they choose to do so and wait until the new year. So that's why you see the up and down and up and down. The reason why I wanted to show this is because if you look at 2022 and then 2023, this looks very different from the previous years, right? The previous 7 years. And then now going into 2024, We're in April, we've just finished off April, and our numbers for April, and usually March, April, May are when we see a lot of the inventory coming in. It might be better, a little better than 2023, but we're still dealing with very low inventory levels and very low new inventory hitting the market. And the prime reason for this, I would say, is the interest rate. So this is Freddie Mac going back to and talking about 30-year fixed rate mortgages, the history of that. We take this back again to 10 years just to see what the trends have been. And so you can see for the majority of the 10 years, we're averaging around 4% and then dip down into the 3% levels. And I know people, and I myself have a mortgage right now that I refinanced into in the high twos. So we have this, and then as I mentioned in the latter part of about the second quarter of January of 2022, about March or April, we started seeing the interest rates start hopping up, and you can see that impact here where it just shot up, and that made a huge impact on the buyers. Since then, the average fixed rate mortgage, 30-year fixed rate mortgage, has been hovering around between 6 and 7%. It did bump up to about 8%, close to 8% for the end of last year. We did see during 2020, latter part of 2022, a lot of the buyers kind of being scared off, or their buying power went down because of the higher, all of a sudden, interest rates going up and lowering their buying power. And so we saw buyers kind of stepping out of the market. 2023, we actually did see more buyers coming in because the thought is, this adage, you date the rate, you marry the home, and you can always, the rate is something that's temporary. Just go after the home that you love, and then you can refinance later. And so that's been kind of the thought. And so we've seen buyers coming back, but the inventory levels are still low. And part of that also has to do with interest rates, which is this effect of, if you have a homeowner who purchased or refinanced in these years, in the 2020 and 2020 through the beginning of 2022 years, they have mortgage rates of 2.5% to 3%, or maybe the low threes. And now if they want to sell and go and buy somewhere else, they're looking at what we see as of last week was at 7.09%. And so there's this lock-in effect of not wanting to lose their interest rate, the good interest rate, and having to look at almost double or even more than double their interest rate. And so that is causing it so that people who don't need to sell are waiting longer. We're hoping to see that loosen up a little bit, and there were expectations that there were predictions previously that we might see the Fed start lowering rates as early as this June, and then maybe a couple more times this year. As many of you probably know, with all of the different numbers that are coming out, and inflation not really being tamed as quickly as the Fed would like, we did see for about 5 weeks where the interest rates continued to stay pretty high, or even increase a little bit over the last 5 weeks. We did see this week actually a slight reduction because the inflation numbers are getting a little more positive. With that said, the expectations that I'm hearing right now are maybe September, Fed might do a reduction of the bank rate in September, with maybe one more. And I am hearing from some people that they're not expecting the Fed to do any reductions until even next year or toward the end of this year. So we'll continue to monitor that. Again, I think the buyers are coming to terms with the fact of the interest rates and thinking they can refinance. So it's not impacting them as much. It does impact them still with regard to how much home they can afford, how many offers, and so they become, because the median sale price is so high, the sale prices are so high, interest rates are also high, it's causing buyers to really have to think more and be a lot more selective. So, and so we're hoping that and there's just not enough inventory, but we're hoping that as the interest rates begin to loosen a little bit, as inflation hopefully gets under a little more control, we'll be able to see more inventory loosening up, more buyers able to buy, etc. And finally, in the field, so what we're seeing, just couples, just pairs with that, which is we are seeing, continuing to see homes that are selling at premium. Multiple offers are not uncommon. They're not as many as we would have had in the past. So on homes now, where we say we have multiple offers, I'm hearing more like, 5, 3, 6, 9, maybe 12 if it's a really hot home. Not seeing as many of those 20, 30, which we might have had in the past. My record, I can't remember, it was 2013 or 2014 that I put an offer on, and the agent told me they had 102 offers. Not seeing that. So, and the buyers are becoming more particular. So if you have a home that's not really quite in moving condition, then you might not get, that might even hurt even more so the offers. So we're just continuing to see that. It's pretty much in line with what I have been talking about. And we were expecting to see hoping to see more listings in April, and we have seen more listings, but they are, being taken up fairly quickly. And at the same time, we are seeing the multiple offers and whatnot. And so there's a lot that's still going on, and I'll just continue to monitor that we'll see May, because if it's usually our peak median sale prices for the years happen in either March, April, or May, usually April or May. So we'll see if April ended up being a peak at that 2,050,000, or if maybe May will even exceed it, and definitely continue to keep track of the new listings. So with that, I'm just going to wrap up a little bit. And we had this past week a seminar, Investing Wisely in the Golden Years, with our special speaker, Duncan Eng, who is a financial planner. And I will be posting that video soon. So please be watching out for that. Basically, he talked about 4 different things. One is Delaware statutory trusts, which are a way that you can actually use an investment and even do a 1031 exchange into. So instead of having your traditional investment property where you have tenants and dealing with them, and especially here in California, we're dealing with more laws that are restrictive toward the housing providers and more favorable toward tenants. If people begin to, you don't want to deal with that anymore, and you don't want to have to manage property, a Delaware statutory trust is something that you can actually do an exchange into. And what that is you're buying into ownership of bigger properties. So it might be commercial, retail, multifamily units. There are projects that you stay in for 5 to 7 years, or in some cases 10 years, and basically don't do anything and just receive the checks from them. So he talked about that. Qualified opportunity zones are not necessarily for 1031 exchanges. They're for actually anything else, anything where you're going to have a capital gain. And there are specific areas that called qualified opportunity zones, or QOZs. I've also heard them as O-zones, but Duncan talked about that in a little more detail, and the different pros and cons of that. Long-term care insurance as another one, as another topic, and then annuities, both fixed and variable, and how you can use that to kind of fix your income into retirement and for the rest of your life. So when those videos are posted, I really encourage you to tune into those and watch them. I may be breaking them up into 2 just because it was a very long session, but many thanks to Duncan for speaking for us, and for also Elsie Wu of Abundance, who's a good friend and colleague, for introducing me to him. I have to say, each of these subjects you can probably talk about for a good 2 or 3 hours just on their own merit. So just keep in mind that this is more of a summary and a little bit of an overview for people who want to maybe investigate that further. And definitely, if you are thinking about any of those, you can reach out to Duncan or your favorite financial planner and ask them about it, because these are definitely tools that you can use to help structure your retirement and beyond. I also have videos, because I have done videos on Delaware statutory trusts as well as long-term care insurance in the past. So if you're interested in that, please check out the other videos that we have on our website. And then finally, I just as a reminder of the rest of our series, and I don't have all of the dates finalized yet. That's going to be my project for the next few weeks. The next one that's coming up will be in July, and that will be remodeling options for aging in place. So, it's becoming more and more of a trend that people want to stay in their homes as long as they can. And so there are ways in which you can remodel and in an attractive way. So it's not just the grab bars, the safety bars that you have um, lining the hallways. It's not there. There are so many other things that have been in the works to make your home, to add attractive features to your home, and at the same time make it more possible for you to stay longer in your home. I am also speaking to someone about ADUs specifically for that purpose of being able to stay in your property longer. So there are some cases where you cannot, there are limitations to how much you can remodel your home to be able to stay there. So another option, if you have the land, if you're a single family home, is to be able to put an ADU in, which will have all of the features that will help you to continue to age in place. And maybe you can rent out the front or have your family members come and live there. So very interesting options, and we'll definitely be following up on that. And then for those who are in our area, August 17th, I really hope that you'll be able to join us for that. It's called the topic is Family Matters, Caring for Aging Parents. And we're going to have a variety of different speakers at that one. I have it scheduled from 9 a.m. to 12 p.m. We are going to be rotating out and having short segments of things like long-term care insurance, recognizing the early signs of Alzheimer's, reverse mortgages, how to help in terms of we have estate clearing services or helping to downsize or relocate. So we're going to have a variety of topics. So if you do have anything in mind, and for those of you who've already gone through that process and have parents who have passed away, and you did have to you did at some point need to go through that process of of having to take care of them. If you have any ideas of speakers or people who have helped you, I'd really appreciate it if you can let me know, because I'd love to invite them to that as well. And what I'm thinking, the way that I'm visualizing this, it'll be short segments, maybe 20-minute segments for each speaker to speak, and then we'll have tables where you can everybody can break up and go and speak with them and get more information on the topics that are relevant to you. In September, we'll have estate planning. So there will be a basics one done via Zoom, and then we'll have an advanced estate planning. I'm tentatively calling it in my mind something like staying out of court, or how to keep your heirs out of court after you're gone, because there's so many special issues so many different issues depending on if you have multiple heirs, if you have blended families, if you have a situation where you have multiple properties, and how to allocate all of that. And so I'm really excited about that series that we'll be having in September. And finally, I wanted to mention that we did have our shredding event last Saturday. It was very hot, but it was a great event. We had almost 200 cars that came through and raised about $1,800 for Mills High School, which is a record for us. So thank you to everybody who attended, and I look forward to seeing you again next year. Usually we do this once a year. It does take a lot of time and effort and money to hold these, so I can't do it more than that. But we do it once a year, usually in April or May. If you did miss it, or if you're interested in the future, please make sure to contact me so that you get on our email list and are alerted to it next time, every time we have it. And then you just check in with us in March or so, and then you'll make sure not to miss it. So with that, I'm going to end this session, and thank you very much for watching. I hope that you'll subscribe if you haven't already, and that you'll continue to check out the videos, especially for the seminar. Have a great weekend and week ahead.